Hello, and welcome. You're watching Agronomy and Economy. I'm Ryan Buetow.
And I'm Levi Helmuth.
I'm an NDSU Area Extension Specialist in Cropping Systems.
And I'm an instructor with the North Dakota Farm Business Management Program, employee of BSC.
And today is April 28th, 2016. I want to get right into the markets.
Moving into the markets. Alright, on the crop side of things, markets are trading mixed. Partially, that's due to a lot of reasons. Partially, the jury's still out on some weather issues. There was weather concerns in Brazil and Argentina, which led to a price rally in soybeans and corn, and wheat kind of followed on both of those coattails, along with some of its weather issues of its own. Also, Wall Street, there's been some trading there. Wall Street started off the day higher and has fallen into the red this afternoon. A lot of different mixed sentiments coming off of those off of the Wall Street traders, with the Fed hasn't been committing about whether it's going to raise interest rates in June or not. The dollar weakened today off of news out of Japan's federal bank, so that creates some uneasiness in the sentiment with the investors, and there just leads to some mixed trading. And that really ties in with the ag markets, because in the ag commodities we've seen a lot of volatility recently, and this is due in large part because of speculators from Wall Street who are trading for profit and don't necessarily have a stake in the ag economy, but they drive a lot of the trade that allows for the trade to occur. You need that's one of the tenets of economics, is a large number of buyers and sellers. So sometimes we kind of villainize those speculators, but we need them to have the large markets. Okay, moving into corn. May futures trending upward. Started out the week at 368, currently trading around 387. So there's almost a 20-cent price swing, and that's part of that volatility that we talked about. Wheat, there's rains expected across the Great Plains and the Black Sea region. And these rains have improved crop conditions in some regions of the U.S. Other regions, such as Texas and Oklahoma, they've caused flooding, and there's possible production issues. So that's some of where the jury's still out. We're not sure if the production issues are good or bad, and if they're going to offset the good and the bad are going to offset each other. Hard red spring wheat May contract has been steady around 530. And similarly, the hard red spring wheat September contract is trading around 530. So there's the potential, depending on what basis is, to see a fall price or a hedge-derived fall delivery contract above our cost of production, which would be really nice to see. Okay, spot prices for month of April so far for Southwest North Dakota. Hard red spring wheat 444, hard red winter 358, durum 609, corn 311, canola 1482, wild sunflowers 1414. Moving into livestock. June live cattle on April 18th fell through a resistance level to $1.20. And last week they bottomed out at about $1.13, and they've attempted to rally over $1.18. Currently trading at $1.14. May feeder contracts are trading lower as well. Earlier in the week they were $1.44, $1.46, and they're bottoming out today around $1.40. So part of the reason for this price reduction, especially on the feeder side, is there's correlation between corn and cattle, with corn being a feedstuff and feed being one of the largest inputs of a cattle operation. So with that 20-cent rally in corn, I'm going to speculate that there's probably that influence the reduction on the cattle price. So spot prices off of the USDA April 16th report: steers 300 weights 214, 400 weights 202, 500 weights 192, 600 weights 177, 800 weights 146, 900 weights 137. Heifers 300 weights 180, 400 weights 181, 500 weights 167, 600 weights 152, 700 weights 145, 800 weights 137, 900 weights 127. And those are mixed to a little higher from the last episode of Agronomy and Economy. So that's where the markets are at.
Alright, for our topic of the day, we're going to talk to you a bit about goals. So you need to evaluate and possibly adjust your operation to maximize net returns, and you need to do this without carrying any long-term issues. There are short-term goals and long-term goals, and you need to think, are these goals achievable, and how do these short-term goals help you get to your long-term goals?
Right. You've got a lot of moving pieces on your operation, and unless you have an objective, you're not going to know which way those pieces should be turning. In economics, when solving math equations, you have to define the objective function in order to solve the problem. Similarly, you'll feel like your wheels are constantly spinning unless you define the objectives of your operation.
Right, and one way of defining your operation is by setting goals. So there are many ways of setting goals, but today we're going to talk to you a bit about SMART goals.
Now, when we say SMART goals, we're not saying that you should have some sort of artificial intelligence software setting all the goals and parameters for you. It's an acronym for specific, measurable, achievable, realistic, time-oriented. SMART goals.
All right, so starting out with specific, you need to be specific in your goals. It's not enough to want to make money or have high yields. You need to say what amount you want to make, or have an ROA in a certain percentage, or how many bushels per acre do you want to increase your yields to.
Absolutely. And in that same train of thought, these goals need to be measurable. You need to say that I want to be here. Well, we need to measure how you get from here to there. And did we go from here to there? And if we didn't, what can we do differently? And so you can look at that with the farm financial ratios and measure where you're at and measure whether you went up or down off of that. Similarly with calf weights, or what your yield increase or decrease was year to year.
Right, you can't just say you want to be successful. You have to specify what success means to you. And getting into the next of the acronym, we have achievable. So next we want to have achievable. These different regions have different climates, they have different fields with different levels of productivity within the field. You need to be honest with yourself and set achievable goals. Just because you plant a population, put down the fertilizer for a 200 bushel per acre corn crop, you need to be honest with yourself, you need to be realistic with your goals.
Absolutely. And that brings us to relevant. And you need to set relevant goals. Make sure the goals that you're setting help you achieve your long run objective, or that these are going to be beneficial to you in some way. And you need to think about the resources you have available, and if achieving this goal is actually the best use of those resources.
Right, and your goals are going to take time. You need to be patient. Some of these will take several years to happen, so try to set benchmarks for your goals.
Right, you need to be realistic about that timetable. Generally it takes more than 1 year, even more than 5, to do things like improve your farm financial ratios, your farm financial position, increase the soil productivity, improve the genetics of your cow herd. Those take time, and you need to be realistic about, and not get over disappointed if you're not moving fast enough towards those goals.
Definitely. Well, that's all we have for you today. Have a good one.
Thanks for stopping by.